Hello traders, the PCE report is out today, the February PCE report. What is it and what do you need to know and what's it going to do to SPY and the rest of your trades? It's the personal consumption expenditure report. We can use it to anticipate market moves, so staying ahead of the curve with the upcoming release of the Federal Reserve's core personal consumption expenditure price index. It comes out today, this morning. It's the Fed's preferred measure for measuring the amount that Americans spend on stuff. And it gives us insights, economic trends. It's a good indicator of the economy, of the labor market. It gives us hints on inflation's heating up. And it tells us about potential shifts in the market. The Fed's cautious stance on interest rates adds a layer of additional complexity. So we're monitoring this report for inflation impact very closely. Key data points to keep an eye on: consensus estimates predicting 0.4% rise in the headline PCE price index for February. That figure would serve as a barometer for inflationary pressures and could significantly impact various trading strategies. We get confirmation of market trends. The latest update to this PCE will likely show the turbulent start we've had to the year, with January and February indicators showcasing resilient US economy alongside higher than anticipated inflation, so traders adapting strategies accordingly. Strategic considerations coming from this report: given the Fed's cautious approach to the interest rates, then any adjustments amid this uncertain dynamic will be really insightful. Traders would evaluate portfolios, and management of risk would come very much to the forefront if unexpected data was dropping. So it helps us stay informed, stay ahead of the curve, and be aware of what could possibly happen. Personal income and outlay reports alongside the PCE index are helpful. Timely analyst decisions based along these data reporting periods can be quite helpful. It's also important to realize, though, and pay attention to, it's not just the latest report, it's also any updates or changes to previous reports to bring them into a higher degree of fidelity. These adaptations and updates can have as big an impact as the data being released today. So what are the implications for SPX and the charts and your trades? How can you make money off this? Well, we can manage our decisions around important areas of support and resistance on the chart. If we get our entries as close to our stops as possible, we reduce the cost of the trade, and then you get the best possible outcome. You can even possibly take it both ways with the right TA and the right tools. So here's some of those now. Thanks very much for watching. Hit the like button. Remember that it's not just this show. We cover all sorts of things on the channel, really help level up traders, broad view of the market, an in-depth understanding of technical analysis, and a very well-honed and experienced approach to managing risk. So if you want to learn more, or you think that you could improve on your trading, I guarantee you I can help you over at Discord, www.discord.gg/RockyOutcrop. Now into the charts and where we'll be managing that risk. It was Tradespotting in the kitchen with a candlestick, not Jerome on the 4-hour, though here he is. Price action there, coming in, testing that equal all-time high, prior weekly high. Go away news, this is the news. Jerome with a quite a stern gaze, affixed at around 52.80, so 30 points potentially, according to Jerome's gaze. As you can see, price action on SPY, strong linear channel to the top side here. When price action has come in and tested the lower sides of this channel in around this area, and suppose you would say in around here, this area likewise, these are the last 3 times that it got to the bottom side of this channel, giving it that reality. There's also a trend line here where price action also coming down. At previous lows, each of these, as you can see, testing the center line or just below on the RSI. So when this channel is in danger, that is when the trend, the linear trend as measured by the support line underneath, is in danger, you would likely see the RSI at the low side, probably the center line, at the minute in at around 50. And it's not there yet. So if price action is to move towards the bottom side of this channel, then RSI would likely give you a little bit of a heads up. At the minute, it's butting up against the bottom of the bullish control zone. 4-hour time frame, poised for a move to the top side or a potential failure leading to a retracement. As you can see, there's been a wick high on this previous 4-hour candle, but it itself was positive. Down to the 1 hour now, where we get this downward sloping resistance being broken as price action made it to the basis line there and the 236 of this most recent rise. So holding support, potential bull flag needs to break above that prior high in order to get the measured move to the top side. Measured move potentially then just taking it from the liquidity here within the flag, going and dropping it on top, takes you to the top side of the channel. Makes sense to see it at 53.20. Oof. 80-point rise. If it does make it to the top side of that channel and break, we'd probably take this to be our measured move, drop it on, and our target would be back up at 55. I say back up, but it's because we've been here before in the analysis talking about this horizontal level being the target for SPX over the next maybe month in a bull trend, especially if it starts to break the top side of this channel. If not this quarter, probably targeting those areas isn't too crazy. So RSI there holding its own moving average, needs to get back into the bullish control zone or it's in danger of inviting an argument. As you can see here, 30-minute time frame, a little bit of a rejection out of that zone, still holding the 236, higher highs, higher lows. That's something you also can't really argue with. Looking left, you can see where 5250 is back within the formation. We haven't managed to break that resistance. When you do, sharp moves. If it breaks 52.80, I'd say you'd be on for that topside target back above 5300. Now I say back because I've talked about it a minute ago. 15 minutes, even more detail. Here you can see the bearish divergence, price action pushing to the top side, swing failure, rocky outcrop flash, making it easy peasy. If the PCE data comes in negative, then you'd likely see a test of 52.43. Easy peasy, really. 11 points from where you are at the minute. Easy trade today. Manage your stops in around that 5250 level. Place to look for an entry and stop loss. Either side of that would be a good directional trade in around 5225. That's the basis line of the channel again. Negative PCE data. The sentiment might take it back here. Golden pocket if you break the 236. So 5250, stop and an entry. Target in 5225. Absolutely brilliant with an intermittent target at 4243. Might work. If prices break down, you can easily take that trade. If you're looking to take this to the long side, maybe you would just take the contracts, get the underlying, very expensive. You might do, pushing it up to the top side, managing that risk with some leverage puts. That would be cheap insurance, wouldn't it? That's one way of potentially doing it. If you want to know more, let me know. Just ask me in the comments. Or join Discord, check it out. Loads of people over there. Very, very good at doing this sort of thing. Very proud of them. It's so good. Great group of guys and girls. Join them, get in the Discord. Links in the description below. It's free to join initially, but you'll want to upgrade. So that's what we're looking at with SPY. These are the potential targets and moves. That's why it might move. You've got the RSI, the momentum, the trend, market structure. Some spectacular little indicators to make it so concise and save me from doing so much other work. You also get them free if you join the page side of Discord. There they are. Rocky Outcrop Flash, Rocky Toolkit, and his own RSI with its own brilliant little features and nuances. So many other things to look to in the market. So we're covering them all in extra videos today. We've got things along with today's PCE report. We've got the video on Coinbase, and they've lost the case against the SEC. It's going to a jury trial. The stock is down 2.5%. What's next for Coinbase, and will it impact the cryptocurrency market? Bitcoin itself pulling back just under that $70,000 target. Now people getting these entries at lower value, looking for targets back up at around next all-time high, perhaps around 79, then 90, and then 110, and then 127.29 next on the cards. That'd be amazing for Bitcoin. You want to know more about that? Check out Rocky Outcrop's video. I'll link that at the end and try and put it up the top there. If you've got any questions about anything we're covering today in any of the videos, don't hesitate to ask. I'll do my absolute best to help you. Remember, there is no help in rushing to be rich, and there's plenty of wealth in waiting to be right. I've been Tradespotting. You've been Tradespotting. Because, you know, as well as a noun, it's a verb. Ta-da! Working for that Yankee dollar. Hit the like button, support the stream, become a member. Thank you.